Good evening and welcome. Thank you so much for joining me. And I hope to provide some insight, some helpful information to help you with your home buying journey. I get asked so many questions all the time, so I really wanted to help you guys out with exploring options and ideas and hopefully giving you some information that is new that will help you start thinking about this process a little differently and how you can help work with your realtor and ask different questions and also ultimately know the process, how it works, and some more of the numbers that are a little bit more exact that most people don't tell you off the bat so you're not caught off guard. So awesome. So let's go ahead and get started here. I'm going to share my screen. Awesome. Let's dive in. Okay, so like I said, I primarily put this together because I wanted this to be more information than you can kind of find online or that maybe you've heard. But the main thing is this information changes quite often, especially the lending and the number side of things. But this is such a good starting point, and I'm always here as your professional realtor to answer any specific questions that you may have. Okay, so keep in mind a little disclaimer. Let me move my screen here a little bit. Well, reviewing this is very specific to Texas. Now, while a lot of this will apply to other states, this is very specific to the Texas laws and the applications that presumes. So again, this information is current as of December of 2020. Every transaction is unique, every client, financial situations. So some of these numbers are not going to line up exactly, but it's going to get you a good starting point. And remember, anything in real estate is negotiable, like everything. So always keep that in mind as well. Like to throw that in there. All right. So the short, the sweet, the simple, the stages of buying. Okay. You got the dreamer stage, the fun part. You might use, and everyone does, a site like Zillow or Realtor or Trulia. There are many others to start looking at homes, start getting ideas. Okay. So a lot of people use that as their first step. And really, your first step should be getting a pre approval letter. And I'll go into the steps more specifically in a moment. The next part, the doer, looking at houses, working with Realtor, working with negotiations. And then finally, after the roller coaster that happens during the process, proud homeowner. That's it. That's all you got to do to buy a home, right? End of webinar. No, I'm just kidding. Okay, so why use a real estate agent? As a buyer, you are not responsible for paying your realtor. Okay. Most people are a little concerned. They might know this, but they might not. But their commission is generally, again, this is very general, comes from the seller. Okay. And you want someone that's going to represent your sole interest as a buyer. Okay. You don't want to use the same agent. A lot of people will send requests from realtor.com or Zillow trying to get a hold of the listing agent, trying to, get different stuff and trying to buy this house, right? But their interest is solely representing and protecting the seller. So why would you want to work with them? They're going to get double the commission and they're not legally allowed to give you advice. That's a no-win situation. And same thing with a builder. A lot of people will say, or the builder specifically, you don't need an agent to work with me, just work with me. Well, the price is the same no matter what, and you're not going to get representation, which you need by a licensed professional. They're going to protect your interests, and they can help with negotiating repairs and some add-ons and things like that. Okay, so it's very important to use a realtor, especially with new builds and with any particular build. So a little blurb at the end, time is of the essence. Things move really fast in real estate. It's very important to work with a full-time realtor as myself that can handle those communications quickly and efficiently. Okay, now put together what are the steps that you take? Okay, so the first step is to get with a lender and see what your options are. There are a lot of loan products. There are a lot of options you can do with different points and different programs, loan assistance or down payment assistance, first time home buyer grants, things like that. Talk about more of that in detail, but you need to know what you qualify for because you have no idea what to shop for unless you know what to qualify for. I'll say obviously a common mistake is looking at houses before you know what you can afford. Now, this is an important step that a lot of people necessarily don't 100% commit to. Okay. They have an idea of kind of a location ish, but really consider your lifestyle. Okay. So that's a little bit more than location. That's about community, commute time, um, really anything closest to restaurants, churches, school districts. There's a whole gamut that this includes. Lot size. This is very important to your overall health and well-being, right? So one of the worst things you can do is buy your perfect house that's HGTV ready, right? But that's an hour or 2 hours outside of where you want to be. So obviously with any location or with any real estate, obviously it's about location, location, location. I know that's very silly, very cliche, but it's very true. And if you've noticed, obviously the further you go out of the city, okay, usually the prices become a little bit lower. But the big thing to remember with home ownership is everything needs updates. Home takes maintenance. If you notice, styles change every 5 to 10 years and quite drastically. So the inside of your house shouldn't be the most important part, okay? Because you're going to have to change it, especially if you live there, or even if you want to sell it, you're going to need to do some updates. So don't get fixed on that. Too many people get fixed, and that's where all the bidding wars, that's where all the stuff happens because, oh, they got the freshest look, okay? But you're going to pay a lot for that. And then once you become a homeowner, you're going to be responsible for changing it to the next one. Okay, so once you find your dream home, then it's about the offer process. Now, I wanted to mention this really quickly because not too many people are aware of this. When you're searching on Zillow or Realtor or any other sites, you need to pay attention to what the status is. And what I mean by that is the status of the home or the contract at the time. Basically, I'm not going to go into all the details because that could be 20 more minutes. But if it doesn't say active, there's something going on. So even if it says active contingent, active option, active kickouts, pending, those are the house is under contract. Okay. So only if it says active, just one word, doesn't mean that it's on the market, that please go see it. And again, if you need specific questions or have about a property, I'd be happy to answer that in greater detail. But active is the key word here. All right, so working with Realtor to do an offer price and contract details. I put this in here because a lot of times I work with clients and they say, oh, let's just go in, we won't offer 260, we'll see what happens. Well, there's more to an offer price than just a number. Okay. There's all the details, right? There's about earnest money, option money, home warranty, closing dates, concessions. There's a lot of stuff that we need to have a conversation about, fixtures, exclusions, mineral rights, things like that, that are part of an offer. So when you submit an offer, it is a signed contract saying these are the terms we agree to as the buyer. Do you accept? Okay, so sometimes they accept right away, and sometimes there might be several rounds back and forth. A lot of times in today's market, it is very competitive and there'll be multiple offers. So, say you put something in on Friday, they might say best and final Monday, and you'll know something on Tuesday. So, just communicates the key here, but know that there are options with all of that. Okay, the next thing is the contract. Once it's accepted and all parties sign, okay, that's when the buyer will have to deliver earnest money and option money. And I'm going to talk about numbers more specifically in a little bit, but I wanted to throw that out at the beginning, kind of the first steps once the contract is executed. Executed means signed and ready to go. Once you're in the contract here in Texas, we do have an inspection period, and this is a negotiated number of days. It could be anything, honestly. Typically here it's around 7, but don't hold me to that because that does vary very wildly differently depending on the exact area. But that's the number I'm going to go with for this. Okay, that gives you time to hire an inspector to go in and see what's going on with the property. And if you need additional inspections or different professionals such as roofers or structural engineers or plumbers, you have the time to do that and to negotiate repairs. During this time, you have a right to get out of the contract for any reason. So say the inspection comes out and it's not to your liking, or they don't agree to the repairs that you want done, you can just walk away and you get your earnest money back. And again, we'll talk more about numbers briefly. The next part of the process, we kind of wait, we kind of see what happens, and the appraisal gets ordered. And then this is the bank or the lender's time to assess the property. So they don't really care so much about cosmetics. They're just wondering if the numbers make sense, if the house is actually worth this money, the collateral to the bank to loan you that much money. Okay. And then if it comes in lower, depending on your loan type, could be another round of negotiations. But again, that's like getting really specific, really into the weeds, but just if you wanted to know. And then closing day, you sign a ton of paperwork and the house is yours. A little side note, and this comes up a lot, is just on closing day, just because you sign stuff doesn't mean that it's funded. Okay. So be very careful of that and talk to your realtor, aka I do a good job of this because I've been through this before. Make sure that you sign papers early so the bank and the lender has time to fund and wire all the money to the appropriate people. Because a lot of times, if you sign after lunchtime or on a Friday, it could be a couple of days before it's funded. And even though you've signed, you don't get the keys until it's funded, until the money has been exchanged. So that's an important thing to know. But again, that's my job. Okay, so let's talk a little bit about the timeline. So the offer, once it's submitted, again, we already talked about kind of sometimes it's right away, sometimes it takes a couple of days. The contract, this is important. We talked a little bit about the option and the earnest money. So you generally have 72 hours to do this. Now it's really 3 days, business days. Saturday counts as a business day for earnest money. I'm not going to go into all the crazy details. Just know you have about 3 days to deliver both of those things. Now, this is changing in Texas coming up kind of soon, that you'll deliver both to the title company. But again, I don't want to get too specific to spend too much time on little things. Okay, and your option period, again, I put a general 7 days. This is totally negotiable. It could be 2, 3, it could be 15. Okay, this just gives you time to do your due diligence and inspect it and see what's going on. Financing, a lot of stuff happens behind the paperwork, underwriting, getting bank statements, information, make sure your financials are good so that you can afford the house. So right now, this is generally taking 30 to 45 days, depending on your loan product and your lender. Please stay away from big banks. I'll talk about more of that in a little bit. But 30 days is basically very typical. Now you have to count in for holidays right now, that kind of thing. So that's why I said 30 to 45 days. Closing day, it's yours. So again, overall time frame, expect about 30 to 45 days once the contract is signed and executed by all parties. So if you're trying to plan out when your lease is up, when you need to move, this is kind of an important thing because it could take you a month or could take you 2 days to find the house and get accepted. So there's a lot of things to kind of consider, but I just wanted to throw a timeline out there, a general one, so you get an idea. Okay, finally, right? Let's talk about money. Okay, so the upfront expenses in this contract, you're going to have option money. And again, this gives you this set period of time to get out of jail free card if you don't like the house for whatever reason. And this generally is $100. Now, this is totally negotiable as well. This is just very general for a first-time home buyer. $100 usually gets the job done. It could be 150, it could be 500. This is all negotiable, so it's very market community specific. Okay. The note here is this will go towards closing costs if it's negotiated in the contract, which I always do. Some people don't, but that's an option as well. The next thing is earnest money. All right. So this is basically saying, hey, I'm putting some skin in the game. This is a serious contract. I really want to buy this house. I'm not wasting your time. I'm putting up some cash because I want this to happen. This is an average of 1% of the purchase price. Okay. So if you're buying a $250,000 house, that's a $2,500 check you're writing to go with the contract to say, hey, I'm serious. This cost also goes towards your overall cash to close cost. The inspection, okay, this is the one thing that is a one-time service, like getting your oil changed or going to a mechanic or getting your HVAC serviced, okay? It is 400 to 800 is a general range, and this depends on the size, it depends on the scope of the work. I'm not going to get too much into details, but if you need additional stuff that's basically outside of the house, like a septic, a well, a pool, there's different add-ons, even termite or what they call WDI, which is wood destroying insects. That's a different inspection. There's some thermal stuff they can do, radon testing, foundation. There's a lot of things they can add on. So I put a range in there. It could even be more, but on an average home, that's what it is. Then the appraisal. So this is what I talked about the bank making sure that it makes sense for their for them to lend the money, okay, for their risk factor is a better way to say that. This is an average of $500. This again I've seen it go up a little bit, upwards to 750, but that really depends on the size and the location of the house. This also goes towards closing costs. So your option money, earnest money, and appraisal are going to go towards your overall closing costs. The inspection will not, because you're paying a company to do the work. Okay. So I went ahead and wrote it out: a $250,000 house, $100 option money, $2,500 earnest, $600 inspection, $500 appraisal. That's $3,700 that you're going to need up front. So what I mean by that is before you close, before you write the final check to get the keys, you're going to be out of pocket $3,700. Now, if you decide to pull out or different things, you're going to get all of that back except option money and inspection money. But if you make it past option period, the option money will go towards closing costs. All right, so let's get specific about the down payments. Okay, so if you're using a VA loan, which you have to be a veteran to qualify, it is 0 out of pocket. With a conventional, it generally starts at 5%, but I've seen some 3%. And again, this is where the numbers get very specific to the day and the client, your credit score, your income, your debts. It gets very specific to your situation and the daily rates. Okay. But with 5% down, basically generally where it starts, you're looking at $12,500 for your down payment. And you've already paid earnest money, option, and appraisal. So after that, you're going to owe $9,400 towards your down payment. Now there are two sides. We'll get to this in a second. You have your down payment and closing costs. They are different. Okay. Sometimes people think, oh, I got 3% or even 5% to put down on a house. Well, that's great. But what about the closing costs and your escrow? We'll get to that. So FHA loan with 3.5% down, again, it's the same thing, minus it's 3.5% versus 5%. So your down payment is $8,750 instead of the $12,500. Okay, so this is where it gets a little bit more complicated. Closing costs are variable and depending on a lot of variables: property taxes, homeowners insurance, mortgage insurance, lender, title fees, origination fees if you're buying points. The list goes on. So in general, I recommend having 3 to 4% of the purchase price, at least here in North Texas, to cover closing costs. So on that $250,000 house, you're looking at an additional $9,000. Okay. Now, not all of that is just eated cost. Okay. Some of that is going to be your escrow or your prepaids. So that's going to be 14 months of taxes and some insurance. So because here in Texas, your property taxes and your homeowner's insurance is paid once a year, in one lump sum. So closing costs, if you putting down less than 20%, the banks require you to set up this escrow account. So this requires a good chunk of change to have this money available so that it can produce this payment, this yearly payment. Okay. So you might think, wow, 9,000 is a lot. Well, a lot of it is still your money. It's just being transferred over here so that it can pay these expenses on your behalf, given the time, the appropriate time. Okay, so final numbers. And again, this is a disclaimer. There are always negotiations. I'm working with clients and have been for a while that you can get sellers concessions, which they contribute to the closing costs. But it depends on the market. It depends on the price point. There are a lot of variables in that get really specific. So this is if you were taking all of that kind of out of the equation, down payment assistance, that kind of thing. So it's just the raw numbers. So with an FHA loan, 3.5% down with $250,000 purchase price, you're looking at $8,750 down payment plus $9,000 in closing costs. And then I went ahead and subtracted your upfront costs you already paid. So final cash to close, the final check you have to write would be $14,050. But it would be a total of $17,750. Okay. And again, if you have questions about this, I know I'm talking fast, a lot of information, more than happy to go over it to you in detail. I can even show you a couple latest closing disclosures that go over every single little fee and what it's for and all that. Same thing. I mapped it out for a conventional 5%. It's all the same except 3.5 versus 5%. Now I will say, I'll go ahead and go to this. Well, we'll go back. And I have it on a different slide, but biggest difference between a conventional and an FHA loan is you can, depending on your credit score, you can get better rate with FHA, but you have mortgage insurance for life. Now you're always going to have mortgage insurance. And this again is to protect the bank if you don't have 20% down or equity in the cost of the house or the loan. So with conventional rate, that will drop off after you reach that 20%. With FHA, it does not. Okay, a couple little details that are not specific to numbers, but that are really good to know in a contract and in a transaction. Most houses do not, in fact, none of them do unless they say it, come with a refrigerator, washer, dryer, and believe it or not, microwave. Now, the microwave 90% usually comes with a house. So it needs to be built in. So basically, it needs to be in a box, it needs to be nailed down, it needs to be in an enclosure. There are different ways, but it can't just be a standalone microwave on the counter. So, but most of the time it's a built-in, okay? Now that leads into the next topic is fixtures, okay? A fixture is anything that is literally fixed or installed to the house, okay? And unless it's excluded in the contract, it stays with the house, okay? So most of this is more for the seller to realize, but when you're walking the property, if they have nothing in the contract, you get the blinds, you get the drapes, you get, of course, all the ceiling fans, the kitchen appliances, minus the fridge, the TV mounts, chandeliers, outdoor grills. If they have anything mounted to hang stuff, any kind of special closet mounts, that kind of thing, cameras, ring doorbells, anything that's attached and fixed to the house belongs to the contract. Now, there are other ways around things saying, hey, I really want the fridge. There's other ways to include that in the offer, but it's a little different topic. Now, another funny thing that I've come across this recently is it also includes plants and landscaping. So I know it's a little odd thing, but just a tidbit to throw out there because I've seen some people get pretty upset about certain things. Okay, another thing, shop around for insurance, just like you're buying car insurance. Okay, you need to see what riders are available. What that is additional insurance. Okay, just like any insurance you get, you need to read the fine print. With a traditional homeowners insurance here in Texas is not going to cover personal property or, believe it or not, water damage, okay, or slab leak protection, current building codes. These are all specific add-ons you can get to really help to protect your home in case certain things happen. And again, I'd be happy to talk specifically, but most of these things, when we go into specifics, could be their own class, could be an hour topic discussion. I just want to get the ball rolling and to give you a little bit more information than you're used to thinking about. Is like, oh, I just want to buy a house. Let's put in 250. Well, let's talk about a few things to keep you informed, make you make an educated decision. Next thing, negotiate a home warranty to cover everything. There are different levels of home warranties, okay? There are usually 3 different levels for most companies that cover the basics to everything, rekeying, they cover the refrigerator, okay? So just shop around, ask me. That's what I do. That's my job as a realtor, is to help you find all these little things out. But something to consider if you're a questioner like me, I like to question stuff and find out answers and research. So if you're one of those types, go for it. There are a ton of companies out there. They'll give the specifics and you can ask questions along the way. Talked briefly about this is that 20% equity in your principal loan amount, then your mortgage insurance will go away on a conventional. It will not on an FHA. You can always refinance. Now that's a buzzword, right? Refinance. I will say one caveat to that is you can refinance anytime, but they're going to be closing costs again, and there's going to be the loan costs again. So, I mean, you could be looking at thousands of dollars to do that. It's not going to be out of pocket, but it's going to add on to the loan amount. And with today's interest rates in the twos, if you can afford it, I would always say go conventional because it's going to save you the most money and be the best product for you. Now, if you can't, that's fine. That doesn't mean that that's a bad thing. It's just going to add more again to the life of the loan and the mortgage insurance. Now, the mortgage insurance is not that much money. Depends on the price point. It's around $100 to $200 for most properties. Okay, so just throw that out there. But again, just message me separately or we can talk about specifics and I can give you better numbers on that. The next thing, research covenants and HOA rules of the community. This is very important. A lot of new builds, especially, have HOAs. Okay, so what this is homeowners associations. They look out for the community. They have very specific rules to what fence type material you can use, to what color you can put on the roof or what color you can paint. I know my HOA has a 2 tree minimum per yard. Okay. So it varies wildly depending on where you are. So make sure you research that, have your realtor do that work, and be happy to do that. I'm happy to do that to tell you kind of, the ins and outs of that and what you're paying for, if it includes a pool, if it includes trash pickup, what all it includes in that fee. And as always, have some financial reserves, because once you become a homeowner, things start to happen. You need updates, things need to be repaired. It's not like when you're renting, you own the home, you are responsible. So I always just throw that out there as a disclaimer because it's important to know. Okay, so now time for a couple questions that I've gotten several times. So I'll go ahead and address. And once we end this presentation, I'm going to answer more specific questions to you guys that have joined. So about the apartment and bills and that kind of lineup thing. So in general, there's at least 30 days of a delayed payment. And most of the times there's more depending on when you close in the month. So the general timeline is about 45 days where you don't make a payment. So when you close, if you're worrying about rent and paying again, you have a good kind of grace period to help you offset some of these costs that you have done to purchase this home. Okay, so kind of the last thing that I would like to address formally is this idea of first-time homebuyer and down payment assistant programs. Okay, this is highly variable. It changes all the time. A lot of it went away with COVID. Now it's back. And let me just tell you, there's so many factors, too many factors that I can give you any kind of general numbers for. The one thing I can tell you is, unfortunately, as you know, in this world, money is not free. Okay. So if you think that, oh, I qualify for a down payment assistance program and a first time home buyer grants, I'm great, I don't have to spend any money. Please read the fine print. Sometimes your interest rate could be double, or sometimes you can't refinance for 5 years and you got a 6% interest rate. Okay. They're now, that's not always the case. I've seen some stuff where if you're kind of around the 680 credit score, it makes sense and it's not much more money to do that down payment assistance program. But in general, nothing's free. It will cost you money to actually utilize these programs. So it's very important to get with a lender to discuss these options. And speaking of which, I have a lot of great lenders that I work with. There's a lot of information and individualized information when it comes to getting qualified for a loan and your options. So sometimes you need a little bit less money right down, cash to close. It's going to raise your payment. Sometimes the payment's your most important thing. So there's a lot of small variables that are to be considered when you're running these programs, and especially when you're wanting down payment assistance programs, or if you're looking at the 3.5 FHA versus a 3 to 5% conventional. So it gets so specific that I can't give you those exact numbers because it would change by the time this recording hits. Okay. So I hope all of this helps. It's been a pleasure. I'm more than happy to answer any questions at any time. Please message me. Please share this with your friends. And I look forward to connecting with you and helping you make your home reality a success and come true. Thank you guys so much. Talk to you soon. Bye-bye.